one other thing I want to point out is that the balance sheet accounts, you'll notice, has a balance in it, right? You have a balance here, and you also have this thing saying register on the right-hand side. But if I go down past the equity section into income, then it just says run report. We no longer see register. Why is that? Well, the register, the first thing you should possibly think of is like your checking account register. If you go into your checking account, you might enter something directly into a register, which might remind you of the old register bank book that you would have in your checking account. So if you're entering increases or decreases to the checking account, this is one way you can go to possibly enter it a little bit faster. You can go into this register. Now, that's one way to think of it. Now, also, whenever you enter a transaction, remember the general idea is that there should be a form related to it, right? You should have a form. So typically, you're going to enter a transaction, look for the appropriate form, enter it with a form, because that's going to give you all the functionality related to that transaction within QuickBooks. But some transactions don't happen all the time, therefore there might not be a form for it, in which case you might then think, well, is cash affected? If cash is affected, I can use the check form or the expense form or the deposit form, which maybe I can enter directly into the check register, because that might be an easy way to enter that form instead of going to the expense form or deposit form, because it would be the same thing, just a little bit faster of a data input. If cash isn't affected, then you usually have to default to a journal entry. But some people don't know debits and credits. So maybe you'd say, well, there's only 2 accounts affected. I don't want to enter a journal entry like this way because I don't know debits and credits. So that's when you might use a form like the register. So if one of the 2 accounts affected is a balance sheet account, you can go into that register possibly. So like if prepaid expenses was impacted, I can go into this register, and then within here, I can enter possibly a journal entry form, basically. But now I can look at it in terms of increases and decreases instead of in the form of debits and credits. It'll still create a journal entry, but I can see it in terms of increases and decreases. So that's what those registers might be appropriate. They're not just in the checking account. They're there for any balance sheet account. They're not there for income statement accounts. Why? Because the income statement accounts are temporary accounts, not permanent accounts. They're only there to record transactions over a time frame and then close out to the balance sheet. So there's no permanent register that's going to be there. So that means that if you want to use the registers to record a transaction, you have to use the side of the transaction that is a balance sheet account. If one side is a balance sheet account, which oftentimes at least one side will be. So that's the general idea of the chart of accounts.